Good morning, everybody. Welcome to the game plan. My name is Gareth Soloway, Chief Market Strategist here at verifiedinvesting.com. And yes, I am still coming to you from a cruise ship somewhere just off the coast of Mexico, but we have a lot going on today. So I want to cover all the details. We got the CPI coming out here in just a couple minutes. In addition, what we're going to do is look at a bunch of earnings that have just been released yesterday after the close and this morning in the pre-market. We have some big movers. I want to keep an eye on the 10-year yield. Where is that going? We know we had a breakdown in the chart, meaning that the chart favors the downside. Does that continue here with the CPI data? We'll be watching this as it comes out. All right, so let's get right into the charts here. If we take a look at the spiders or the S&P were down in the pre-market early on. You could see this was at 4 in the morning. We had a nice sell-off right down here, and then look, slow grind higher in the pre-market up until the current time. Now, let's go over the CPI expectations, guys. I always like to go over this with you guys. So CPI month over month is expected to be 0.3%. Okay, CPI year over year, okay, that is expected to be 2.9%. So the idea here is that these are the two numbers that we're watching for. These are the forecasted levels. We want to see ultimately what they end up being here when they are released. And I am doing this recording just prior. We have about 9 minutes to go until these data points come out. I will bring them to you and we will watch the reaction live, or at least live here. You'll be watching on a slight delay. Okay, so let's look at the US dollar going into this print here. We have a US dollar that has a head and shoulders pattern. Head and shoulders in technical analysis is a bearish pattern. However, it has not triggered yet. The trigger will be a break of the neckline. So always remember that you can have lots of head and shoulders out there in charts, but all that matters is when the neckline breaks. This line here, and it's not an intraday break, it's a daily close. So you need a daily close essentially on the DXY below 107.64, and at that point we should see continued downside if that were to happen. All right, if we flip over to the 10-year yield, look at this classic breakdown, retrace to the scene of the crime. Now the question is, do we break back above or do we break back down? Probability wise, a slight favoring to the downside. Now why is it not a significant favoring to the downside? The answer is very simple. You never confirmed the breakdown. So here was a close below on the candle. Okay, you never confirmed that candle as a breakdown to confirm the breakdown. Therefore, the retrace, this level here, and this is very key in the methodology that I teach, guys, because you didn't confirm below this white line is only minor resistance now, not major. If you confirmed, this would be major, and probabilities, remember, we always speak in terms of probabilities. Probabilities would be like 75, 80% that we would go down. Because we haven't confirmed, it's only about 60% to the downside. All right. So again, these little tidbits are unbelievably important when understanding odds or probabilities of moves here. Okay. So again, we're going to watch these as we come into it. Just looking at gold ahead of the print here, we are seeing gold continuing to pull back. So we had a doji yesterday. Didn't turn out to be a topping tail. A doji, again, the difference here, dojis are small or lower success rate topping signals. Topping tails are significantly higher success rate. All right, topping tails are more significant in terms of their bearish reversal stature. Dojis are negative, so it is a negative signal here from yesterday, but it's just not as powerful. Either way, gold is coming back in today ahead of this CPI print that, again, will be out in just a couple minutes. All right, let's get through some of these earnings so that when we hit that data, we can go back and look at the data. UPST is having a monster move on earnings here. We'll get rid of that. Don't need that on the charts. Look at this, trading all the way up here. We closed yesterday at 67 and change. We're trading at 84. There's an obvious level here. I have two levels for me in the Apex Live day trading room that I might be looking to trade. Number one is going to be a Pierce of 89, which will be double top. And number two, right here, right? If we zoom out, we take this high, we connect it through these two highs. This would be my secondary level. This actually would be a swing short up here, in my opinion. And again, that would be a swing short potentially. And that is at a price point of around 96 to 97. It's upsloping. So you remember over time, it'll go up but that will be a significant trend line. So this is going to be a day trading one. This would be day trading as well if it hits today. I just don't know if it will. But this one I would be eyeing as a swing short level. This is more just day trading wise. Now you might say, well, double tops are really good for swing trading. Yeah, I mean, you can always dollar cost average, right? Small short position right there. And then you can add here again if you just don't want to miss a trade. That's always an option. In fact, in my services, I oftentimes dip the toe in the water and then I dollar cost average in because it gets us in the game in this way. If let's say it hits here and then just starts collapsing, at least we have some skin in the game going down. All right, SMCI reported earnings, and they also did a whole bunch of restatements on their financials. The stock had sold off yesterday, closing at around 38.50. Today it is up at around $44. Now, no trade yet here, but I am going to be eyeing today this $48 high pivot right here, $48 for potential swing trade, and then just above that is a major gap fill at 49. So this zone right here should be major resistance. DoorDash, let's take a look at Dash here, guys, as we bring this up here. Get rid of that there. If we look at this on the charts, we can see DoorDash is also higher on earnings. It's not a huge move, though. Again, closed at 193, trading at 204. So it's only an $11 move. This would be one of my favorites for a potential initial push up on the open, and then a fade the rally. Now, you might say, well, why fade the rally? Well, a couple reasons. Number one, if we look at this chart, look at how extended it is in the short term. It's been on a grind higher since January of 2020. Well, actually, November of 2022. And it's short term, it is very extended. Number two, what we can see here is that if we take this high and we drag this out, look at this. Right up around 210, you have high pivot to high pivot, and that gets me very interested for a fade. So again, I don't know if it gets to 210 today, but that would certainly be a level to watch. And then if we zoom out, you can see that there's nothing really in here. I mean, really, you'd have your triple top up here. That's a long way away, but that would be the all-time highs on DoorDash. And again, my guess is today, at least, we might test 210, but then I could see this fading just because, again, it ran up into earnings, did pull back a little bit just before, but nonetheless, a pretty solid move. Taking a look at the chart of Lyft. Lyft reported this is kind of like the sister company to Uber in terms of what they do as a company. The stock is lower on earnings. We can see it's right at this low. This is the pre-market line, by the way. So we're right here, and there's a gap fill right below. I do not like that because, again, if we go to the pre-market data, it's already bouncing back above, so it was below that right here. If we go back to the daily chart, this is what I like, though. This level right here. See this flat top right here? It's like a shelf almost. Right in this range, right around 1180 or so. That should be where there's significant technical support today. So listen, it's about 80 cents away on this stock. That could easily get there today. If it does, I'll be watching it. All right, VRT reported earnings this morning. I've already annotated this out. Again, it's down on earnings. Their guidance was not super strong. And again, that is freaking investors out. Remember, this dumped out big a couple weeks ago, then had a big rally back. It's now back here. There's nothing to do here in trading. There's a little support of this gap fill at like 111, but it was already trading there pre-market. What I'm going to look for is this zone here. This, again, look at the two trend lines here, guys. You have this flat top pivot high right through this low, and then this upsloping trend line, both merging between 96 and 91. It doesn't really give us a day trading level per se, but more of a potential swing trading opportunity there. Two other stocks that reported this morning, we have CVS. CVS is rallying higher. This could be good for WBA, Walgreens as well. In terms of trading, you have this pivot top and the gap fill just above right here. So that would be my first level at $63.67, followed by gap fill at 65. So you have two levels here. I'll be watching those. If you really get a big move, I mean, this would be an amazing level up here at 67.50. But again, this one would be a tradable, day tradable level, maybe swing short level. I'd have to reevaluate at that level. And then lastly, KHC, which is Kraft Heinz, trading lower on earnings. The only reason I bring this to your attention, by the way, I don't see a day trade on this, but it is getting to a level here, if we zoom out, where if you get down to like, a little bit lower in this range, this does pay. I think it's a 6% dividend yield. So as a dividend trade or a kind of a longer term accumulation, and again, these are the guys that do catch up and some other things like that. To me, I'm thinking to myself, okay, if we go into a recession, is there the possibility that people still buy catch up? Yes, a lot of the stuff that this company does. So it's not fully recession proof, but somewhat recession proof, paying a good dividend yield. Maybe maybe there's something here. Needless to say, I don't have a trading level on this one per se. So again, I'll just keep you guys up to date on that. All right, we're just about to get these numbers out, guys, in about 20 seconds. I want to flip back here to the charts. Let's get back to the charts. Let's keep our focus on the SPY here in the pre-market. Again, we're watching these numbers. I'll do my best. They when they're released, we see the reaction, and I'll get the numbers like a minute later. The dollar, we want to keep an eye on the dollar and the 10-year. And obviously, in fact, I want to look at gold too, and we'll go over Bitcoin in just a minute as well. I just want to see what happens here on the charts. All right, so here we go, guys. Here we go. Let's see what we have. Ooh, big drop here on the chart of the SPY. That implies the numbers are hotter than expected. Again, I don't have the numbers yet, but look at that drop. 605.5 down to 599. Holy cow. That is a big drop here. Again, that implies that it was a hotter number. The US dollar catching a little bit. Head and shoulders is still intact, but again, moving up is not something the market's like. And then look at the 10-year, guys. Look at the 10-minute on the 10-year. Whoa, look at that pop. So this again implies that the number is higher than expected. Again, I will be bringing this number to you ASAP as soon as I get it on my data feed here. But again, right away, we don't even need to know the numbers. I mean, this is the crazy thing about it. If you understand trading, then you fully understand that you honestly don't even need to see the numbers. You just know if they're worse than expected, which would be hotter than expected. We'll look at the yield, 10-year yield, 4.6%. Ooh, this market. Look at the drop here back to 599. Now, where's the technical support level here on the SPY? So we have to zoom out here a little bit. Wow, we took out this low. So first technical support right here around 597.75, and then secondarily there'll be a lot of support around 596. We're getting a little bit of a bounce here in the or just here after these numbers, but again, very minor bounce at this point in time. And again, impressive sell-off. I just want to take a look quickly at stocks like Nvidia. Nvidia's dumping out here down about $2 from that print here on the numbers. And if we take a look at Amazon, yep, they're all selling off here. Amazon, let's take a look at Meta. Wow, Meta drop. Nice drop on Meta there, no doubt about that. That's a big drop there on Meta. Let's take a look here at Google, and we can look at Tesla. Now, Tesla's one I want to mention here, guys, because, and bear with me as I'm bringing up my charts here. Tesla here, let's go back to Tesla. So Tesla, guys, so remember my level here that I talked about yesterday's game plan, 321. Gap fill right there. I want to show you this because this is just the coolest thing in the world. If we look here, guys, at the chart here, look at pre-market. This was at 4 in the morning. Hits, and look at the rally off the level. Now, usually I don't like to trade, that early in the morning because again, it's a lot thinner than it is right now in the pre-market or even during market hours. But it just shows you these levels are amazing. I mean, gap fills are something that every trader should have in their tool belt. It hit, and literally, if you look at this data here, you can see from this level, from 320, it rallied back to 337 pre-market. I mean, that's a $17 rally. Now it's coming in. You could rebuy. If we hit this during market hours, I think this is doable. Okay, I got the numbers, guys. I do have the numbers on the SPY. And again, let's bring them up here. I'll type them in next to it. Let's go through these numbers. So again, CPI, this one came in at month over month, came in at 0.5. Ooh, 0.5%, much hotter than expected. And then this one came in year over year at 3.3. Is that 3.3? No, 3%. 3%. So both of these hotter than expected, folks. And that, again, is why this market is dumping out. There's no doubt about it. Look at the spiders drop here. All right, guys, listen, I got to get ready for the trading room here. I'm still doing all my normal stuff because, and again, I always want to say this. People are always like, oh man, take a breather, take a relax. When I'm on vacation, it is more relaxing. But at the same time, I love trading. I love this stuff. There's now going to be tons of opportunities. I was in the casino last night, lost 2K. The night before, lost 2K, cut myself off. I was like, all right, listen, I come in and I make money in the markets trading, right? And so that's the beauty of it is like, you listen, the reason why trading is not gambling is because if you know what you're doing, you can do it with a higher probability than a casino by far. And again, I just play blackjack, so I get the odds almost 50-50. But needless to say, last couple nights have not been very good. That's okay. I understand. When I walk into that casino, I expect to lose, right? It's just the nature of the beast. It's more for fun. Trading like this is where the money's made. This is where if you do it and you learn the charts, you can make amazing money. And again, going right to work today and rocking it. You guys have a great one. Thanks for tuning into the game plan. I'll talk to you soon. Take care.